Hey guys, welcome back to the channel. My name is Samuel, financial market analyst. Today we are diving deep into a powerful trading pattern that can help you identify potential market reversal, the double top reversal pattern. This is one of the most reliable technical patterns, and I'm very excited to show you how you can use this to spot trend reversal in your trading. Let's get started. Now, we are looking at USD versus South African on the 4 hours time frame. So, what exactly is a double top reversal? In simple terms, a double top is a bearish reversal pattern that forms after extended uptrend. It consists of two peaks, hence the name double tops, that reaches a similar price level followed by a drop that breaks through the support level known as the neckline, and I'll show you here what I mean in a moment. Essentially, the pattern signals that buyers are losing momentum and sellers are starting to take control. Now, once the price breaks below the neckline, it indicates a potential shift from an uptrend to a downtrend. Basically, this is what I mean. Now, we can see here the market is bullish. We can clearly see the market was bullish here, but failed to break the previous high and closed the same high as the previous high. You can see here it failed to break this high and closed the same high as this one. Now this becomes a strong resistance level. Here this becomes a strong resistance level. From a price action perspective, the price failed to make a higher high but instead made the same high. Now this shows a loss in momentum from the uptrend and the buyers in the market. Now let's get to the charts. We can see here that the market is bullish. From that angle, we can see the market has not broken the trend line. This means the market is still going up. It's considered an uptrend. What we want to see is two tops. Let's see what happens. Now we can see that the market has made two tops. Now what we want to see is the market breaks the neckline. This is the neckline, and closes below this neckline, then retests the neckline, and that will be our entry point. Let me draw the now we have we can see that we have two tops. What we want to see is the market closes below this neckline, then retests the neckline. This will be our entry point. If this happens, then we anticipate that the market will drop. Let's see what happens. Now, we can clearly see that the price has successfully breaks the support, which is the neckline, and pulled back to the neckline, making a new resistance level here. Some people will enter the market here. Some people will not wait the market to get back to retest the neckline. But that's also fine. Now, we can confirm this by using the 21 period EMA to confirm that this will be our entry point. Moving average. Yeah, this is 21. We are using 21 because there are approximately 21 trading days in a month. Now, we can see here the 21 period has acted as resistant here, confirming to us that this would be our entry point. The market is going down. Now, we can enter short here. And the risk reward ratio will be 1 to 2, or we can use the previous higher high and lower low to determine our stop loss and take profit. Now our stop loss will be here. If we use our previous high, our stop loss will be here. Our first take profit will be somewhere here, slightly below our lowest low, our previous low. We are using this zone as our first take profit because this zone is a strong zone. The price has tested this zone 1, 2, 3, 4 times. If the price managed to close below this zone, we will be in for a ride. The price will push further down. So our second take profit will be somewhere here. Now let's place this trade and see what happens. Nice. Let's see how this plays out. Okay. Our first take profit is taken out. We can see that all our take profit has been have been hit. This is essentially how to trade double tops. I hope this works for you. I'll catch you guys next time.